Hey, thanks for joining. I'm going to jump right in. Today, I'm going to talk about what cryptocurrency even is, and I'll share more specifics about the practical applications of what can be done with cryptocurrency that can help us to transcend, in my view and in the view of a lot of people, many of the problems in the legacy economic system. I'll show you this first, this staking example, and I'll introduce myself for anyone who watches this, either now or in the future, who may not know me. This is a screenshot of a staked position that I had created on Uniswap, which is like the premier pioneering decentralized cryptocurrency exchange. I'm going to talk more about how that works because I think it's a really good example of how the tech is being used to transcend problems in the old system. But yeah, just to give you a sense, I'll talk, I'll totally go through all the specifics of how this works and whatever. But this was a position I created using Ether and Bitcoin, excuse me, in the Ether Bitcoin pair. So you can see that up top where it says F/WBTC. Um, and you can see the total liquidity value in dollars here is over $55,000. And then you can see the fees, unclaimed fees. So this was funding that I earned simply because I staked on Uniswap. And this was in a really short period of time. I want to say this was in like 10 days or something, maybe a week and a half. That's not always going to happen, and I'll talk about why. But that's a pretty sick return in a really short amount of time. And that's possible also as a result of the design of this technology. So I'll jump into more about how that works and what it means. In the last live that I did, I started talking about staking and how a person can stake specifically their seeds and Ether on Uniswap. And there was some kind of glitch. It could have been my mistake, but I think it was an OBS glitch. I'm using OBS to do this broadcast. And it didn't show what I was actually doing. It just showed Uniswap's platform. So today I thought it would be more useful for me to try and start with that, to help folks understand like what the point of this even is if you're new to the cryptocurrency sector. Like, what even is cryptocurrency and like why should we care about it? Besides the more obvious idea that, historically it's gone up a ton in value. And so it's made a lot of people money. So that's a reason to pay attention to it. But what about the design and practical use of good quality tools is actually beneficial to us? Relating to that, I want to make sure to also state, you probably know this already if you're showing up to this live, or if you've seen, like, literally the title of this video is going to say, and I think it already says, that it's 8 days until the Bitcoin halving. This is so important, y'all. I can't stress it enough. It's going to be the fourth Bitcoin halving in over 15 years of Bitcoin's existence. It's built into the design of the Bitcoin ecosystem. It's called the halving or the halvening because the rewards Bitcoin generates when a block is mined on the Bitcoin blockchain, those rewards are cut in half. And as a result, the incentives to mine Bitcoin, to create Bitcoin, are cut in half. And historically, that has driven the price up. It's limiting supply and it's driven demand up as a result, which has meant that the price has gone up insane amounts historically, right? So, shh, toy, get your toy, get your toy. Sorry, my barky dog. Um, so it's a big deal by itself, and it's a rare occurrence. It happens roughly every 4 years. The last one was in May of 2020. But in addition to that, we've seen Bitcoin already break all-time highs 4 times in 2024 alone, even though the halving has not happened yet. So that's a huge deal, y'all. And it's a direct result of the fact that in the US, a Bitcoin ETF, exchange traded fund, was approved in January. That means that there's effectively like a Bitcoin stock available, and there are many issuers. I think I saw that there were 19 different approvals at least. So 19 different financial services organizations that are introducing their own Bitcoin exchange traded fund, their own Bitcoin stock. So that means that like mainstream investors who maybe were reluctant to get involved in cryptocurrency or found it overwhelming or whatever, for whatever reason they were aware of it, but they didn't want to get involved with Bitcoin, now have this way to do so that is, something that they're going to be familiar with if they're already trading the stock market. So that means a lot more mainstream folks are going to be getting involved this particular cryptocurrency cycle. And the Bitcoin halving, to be clear, is what has kicked off these cryptocurrency cycles. So again, it's about 8 days away. I actually want to show you, if we hop in here real quick, I can show you a countdown clock. So this is the predicted date. Y'all can see that, right? I think. Yeah. And this is varied. It was initially, it said, well, not it's changed a bit. Sometimes it's told us that it was expected to happen on April 20th, sometimes on April 18th. This is because it's going to happen when a specific block in the Bitcoin blockchain is mined. Right now, they're thinking that specific block is going to be mined at 4:16 p.m. Pacific time on April 19th, which is 8 days away or so, right? So this is the countdown that you can keep an eye on, which can be helpful. And then we're going to talk more about decentralization and what cryptocurrency can actually do and why that matters for us. Okay, I said I was going to introduce myself for anyone not familiar with me. I'm Rachel. I'm the founder of Seeds. Seeds is like crypto mutual aid. It's helped people in need in 30 countries and counting. When you help someone in need through Seeds, you get Seeds cryptocurrency in thanks, at the value of your gift, according to the market value at the time you make your gift. So if somebody had redeemed a seed to ask for help because they needed $2,000 to cover their rent and you gave them $100, you would get $100 worth of seeds at market value at the time you gave that $100. So the idea there is that we want generous people to benefit, to be able to build wealth because they took the action of giving, because they helped someone in need. And if you're into that, you can check out the links in the description and consider helping somebody out, and we'll send you seeds and thanks. I do these talks because I want us to get out of the old system, essentially. That's also why Seeds exists. But as Seeds has been helping people in need over the years, it eventually became clear that I could also offer like more insight about the cryptocurrency markets broadly, because I used to be a stock trader, a professional stock trader. It was a career profitable professional stock trader. And I eventually quit because the misogyny was so ridiculous. And also, I just came to understand that the design of that system is really stupid. It's literally manufactured zero sum paradigms, because when you're trading by design, like if I made $1, it was because somebody else lost $1. And that doesn't make any sense because money isn't scarce. It's literally everywhere. Governments are printing it continually. There are 180 different fiat currencies generated by centralized nation states, the governments of centralized nation states around the world, and then cryptocurrencies on top of that. Money is everywhere. It's just that it's flowed in weird ways because of the gatekeepers controlling it. So I started buying Bitcoin in 2013, and I was so excited by the technology's potential to allow us to rebuild the system, to build a new system that would make the discrimination that I experienced as a woman in finance obsolete. And so many of us have experienced some form of that discrimination because it's just baked into that system by design. So Seeds exist to try and transcend that system by rewarding giving and getting us out of this stupid nonprofit for profit binary and that zero sum paradigm. And the reason I give these talks is to try and help people. I want people to become aware of Seeds because like no one knows about our project. And the more people know about it and the more people that use Seeds, the better it works, the more people it can help, and the more abundance it can bring to generous people who are helping others in need. And also just generally, I want artists, people working in social good, people with a lot of feminine energy, women, but regardless of your gender, people who are just like aware that we're going through this important moment in history where ascension is happening and the rise of the feminine on earth is happening. I want y'all to be the ones who are benefiting from these cycles, because if you have more resources, you're going to be able to do more of what you're already doing, which is making this world a better place. And to date, there have been way too many like crypto bros benefiting from these cycles. And There's a lot of just toxic energy in the cryptocurrency sector. And so I just want to shift things away from that, which is why now is such an important time. Because as I said, we're coming up on the Bitcoin halving. That's been the catalyst for the big market movements we've seen in the past. And this is an unprecedented moment because Bitcoin has already broken its all-time highs 4 times this year alone, even though the halving hasn't happened yet, because we have these other market factors like the introduction of these Bitcoin ETFs. In addition to that, in May, we may have an Ethereum ETF, a stock version of Ether, introduced in the US, although it looks like there could be some trouble surrounding that. Excuse me. The SEC in the States is not pro crypto. And it's unfortunate because there's been a lack of clarity surrounding the regulatory environment in the US, and it's chased some innovation outside of the States, which is stupid. But in countries that are that are more forward thinking, like for example, there's going to be ETNs, exchange traded notes, a Bitcoin ETN, as well as an Ether ETN introduced on the London Stock Exchange on May 28th, I read. So that's probably going to have a similar effect, to what we saw because of this Bitcoin ETF's introduction in the US in January. It's bringing a version of cryptocurrency to more mainstream investors, which will probably drive the market up. So given that that's the case, this is a really, like, we have a sort of narrow window of time, I would say right now, with which it's going to be, there's a likelihood, like past performance doesn't guarantee future results, whatever, but there's this likelihood that it could be even more beneficial to get involved now-ish before these things are happening. So I'm really trying to like shout this from the mountaintops. And we have a course coming up as well. The course is called How to Build Abundance in Cryptocurrency. So if you want to learn more about that, that link is in our description as well. The course closes on April 20th. So I'll share more about that in a bit too. Okay. Did I intro? Yeah, I think I introed myself sufficiently. Okay, so I talked a bit about what we're seeing here. I think to step back, if I'm describing what cryptocurrency even is, the important distinction between what we'll call the legacy economic system, so TradFi, traditional finance, banking, the stock markets, that world, is that it's centralized. There are centralized banks that control money, that hold our money. When we use a bank, that bank has custody of our money. And that's a really, really important distinction to recognize. However, when we're using good quality decentralized tools, and I would say that Uniswap, this platform I'm showing you a screenshot from here, Uniswap is a good quality decentralized tool. When we're using those tools, we don't have to give up custody of our money in order to reap rewards. We can retain that custody. This is a huge deal. A big part of the reason for that is, like if we think about bank collapses during the Great Depression, for example, bank runs during the Great Depression. For anyone who may not realize this, the way those banking structures, traditional banking structures work is that, they try to get people like us, retail customers, to make deposits at their banks. They offer to pay us whatever shitty interest rate they're going to pay us for the year, 0.5% or whatever terrible amount it is now. And then they take our deposits, and because they have a larger amount of money, because they're, using deposits from many people, that makes it more possible for them to reinvest that money somewhere else and make way more than the 0.5 percentage point that they're paying us. And then they keep those profits. So they're profiting on our backs. And we've just accepted it because that's the way the banking system has worked for hundreds, if not thousands of years. I'm not sure when things were established in Britain, probably less than 1,000 years ago. And when the US was formed, we essentially just replicated the British banking system here, which I think was a missed opportunity. So we're used to that. We're used to giving banks our money and we're just supposed to trust them. And then we have these governing entities, like in the US, we have the FDIC that insures deposits at banks up to $250,000. So that's supposed to help us trust the banks more in case they screw up. At least the government's going to cover $250,000 worth of deposits for us. But, that's one centralized entity backing up another centralized entity. And the design of that is not ideal. And I think we're reaching a point in terms of the evolution of humanity at which we're shifting toward decentralization. I think the energies point toward that. The astrology certainly points to that if you're interested in astrology. Something else that I think is a fun fact is that the Bitcoin halving that's coming up in 8-ish days is happening almost at exactly the same time as the Jupiter Uranus conjunction in Taurus, which is it couldn't kind of be more perfect because did I say that right? The Jupiter Uranus conjunction in Taurus. Yeah. So Taurus is money and value, Jupiter is abundance, Uranus is tech and decentralization. So it's just pointing toward this idea that we could see a huge boon in cryptocurrency. Like that it's kind of obvious, I think, for anyone who knows. I'm like totally a hobbyist. I don't know a lot about astrology, but I think it's pretty clear for like legit astrologers, and it's fun to think about. It's fun to be aware of, I think. So yeah, I think we're shifting away from this centralization thing. We're seeing that break down. I mean, like with the US presidential elections coming up, it's funny and terrible that like I don't know what could be a more sort of obvious emblematic indication of this than like two 80 plus slash 80-year-old white men being our two options for like leader of the free world. Just that whole system is increasingly not making sense in the way that it's set up. And I think a lot of the reason for that is centralization. So good quality cryptocurrency projects are decentralized by design. They're set up such that it's not necessary to have a trusted third party, a centralized entity like a bank, to make sure transactions are secure and to guarantee transactions for us. When you hear the word blockchain, that's an important part of what's accomplishing this. A blockchain is the immutable ledger underpinning cryptocurrency networks. Different cryptocurrencies have their own blockchains. And what's kind of cool is that, excuse me, if you use what are called block explorers, which anyone can access if you have an internet connection, excuse me, you can literally look up any transaction that has ever happened on the Bitcoin network, for example. You can look it up by wallet address, by transaction ID. The same thing holds true for Ethereum, which is the number 2 cryptocurrency network by market capitalization. Yeah, so we can see all of those transactions. We have that sort of level of transparency that's available by design. And the system itself is moderating itself. There isn't like a centralized Bitcoin organization, that's moderating the price and issuing more because there are inflation issues like we see uh, happening in countries where they're trying to to somewhat control the value of their fiat currency at a given time. Fiat currency is currency issued by a government. So yeah, it just kind of eliminates the need for that. And we didn't have the technology to accomplish that until relatively recently. And it's a super exciting development, I think, because like, they say we're like living in the information age or something. And we've been so fortunate in a sense to be alive at this time where there's been this great democratization of access to good quality information. We still have to be discerning about whether or not information we're accessing is legit and is of good quality and whatever. And obviously that's caused problems with misinformation being a big issue like in the last presidential election and stuff. But we have all of this information available to us like at our fingertips if we have a device that can connect to the internet, and that's enormous. But we have not yet taken significant strides toward democratizing access to money, to resourcing. And so that's what Seeds is working to do globally for as many people as possible. Cryptocurrency generally, blockchain technology makes that possible in a way that wasn't available before. And I have to stress, I don't see any other project out there that is working to do this to the extent that Seeds is. And that is like, I mean, Seeds is expressly dedicated to getting funds to people when they need them. There's no other crypto project out there that's like that. And in some ways, I feel like that's like one of the more idealistic, the most idealistic. I think I'm undercutting myself because it's our project. Like it is a much more idealistic use of the technology. And it's also practical because it's helped people in need in 30 countries and counting so far. So these are things that are possible because of the tech. In the case of seeds, for example, we send gifts in seeds cryptocurrency, and one recipient was a group in South Sudan. I want to see if I can show you their picture. Maybe I can pull that up real quick. Um, who had they gotten UN aid to dig a well, and like they dug the well. They were able to successfully do that, but then UN aid left and they were just standing in a hole, like with it just became this giant mud puddle, and they had to stand in mud to get their water. So they redeemed a seed to ask for help to pave the area around the hole where the well was. And we were able to send them those funds directly, even though, like, for example, in South Sudan, people, the government, as I understand, doesn't issue women IDs, so women can't open bank accounts. So, like, what are they going to do? Traditional finance is completely excluding them, but they could receive help directly from seeds, and then they could use decentralized tools like Uniswap because they're available to anyone with an internet connection and a mobile phone, and to receive funds that way. So it was cool because we were able to step in and help somebody out, not only when the traditional banking system had failed them, but also when the traditional aid system had failed them. Um, and that's a big deal. It's a really big deal. I'm like having trouble talking and also looking for this image at the same time. Let me see if I can pull it up real quick. Yeah. Yeah, here we go. So, and it's cool too. When they made a request for help, they made a TikTok so we could see it. Yeah, so you can see here, this is where the well was dug when UN aid came in, and they were standing in this hole. And because they redeemed a seed through a seed to ask for help through seeds, we were able to send them the funds. It was like $1,200 to take care of filling this in. So that was awesome. And South Sudan is consistently ranked to be the most difficult country to live in the world. But a tool like seeds, because we're using blockchain design, was able to help them out when they needed it. All right, so looking at this, I wanted to talk through this sort of practical example of DeFi, decentralized finance, through using Uniswap in this like profitable staking position that I had. So the thing is their UX, their user experience isn't great, so it can seem especially confusing to look at this at first. But I'll try to talk through it as best I can. So when we're looking at this, as I mentioned earlier, this shows that I had staked in the Ether, ETH/Bitcoin. WBTC is the symbol here for Bitcoin in that pool on Uniswap. The reason for this is that, so when we're using centralized exchanges, on any exchange, there has to be enough liquidity, enough of the whatever it is, the assets that we want to trade. There has to be enough of that available in order for traders to execute trades, because if you can't trade there, then people are going to leave and the marketplace doesn't work. The market doesn't work. Historically, the way that problem has been solved has, been that a few rich white men, if you're in the States or if you're in Britain, came together and they would put up the money. They would get the money together so that there was enough capital available on the exchange for traders to make trades. And then they would get richer because they would charge trading fees for usage of those exchanges. What Uniswap discovered is that this could actually be accomplished in a decentralized way without the need for that centralized authority, without the need for that handful of rich white guys, more or less. I mean, because anyone can do this. Rich white guys are still doing this as well. But it greatly democratizes marketplaces. It's really fucking exciting, in my opinion, because they figured out that if they paired cryptocurrencies And if they built this platform, Uniswap as a platform is built on top of the Ethereum crypto network. Ethereum was designed with the intention of making it easy, relatively easy for software engineers to build on top of the network, because Bitcoin wasn't designed for that purpose. So Ethereum wanted to improve upon that essentially. And they have. And for that reason, I think there's a likelihood that Ether could overtake Bitcoin down the line, which would be interesting to see. We'll see what happens. So Uniswap was built on top of Ethereum because that was relatively easy to do. And the founder, this guy Hayden Adams is maybe his last name, Hayden something. I guess he had a background in thermodynamics, made him think about how things flow, how heat and air flow, which influenced Uniswap's design. He realized that you could pair cryptocurrencies. And actually, to be fair, I think Vitalik Buterin, who's like the visible Ethereum founder, I think he may have articulated an idea like this before it was actually executed. The idea, though, is that what we could do is create a marketplace for projects built on top of Ethereum, because there were more and more that were coming into existence because it was relatively easy to build on top of Ethereum. And in order to trade those cryptocurrencies, we could create these pairings. So, like, anyone who wanted to, who had the cryptocurrencies in question, could create liquidity pools to build this marketplace. And they would be built in pairs. And Ethereum, Ether, the cryptocurrency, Ethereum is the crypto network, although the words are sometimes used interchangeably. Ether would be like the mediating cryptocurrency. So you could create an Ether Bitcoin pool. And then if you wanted to trade Bitcoin for seeds, for example, what would actually happen on the platform is you would execute the trade, but what they would do is they would trade your Bitcoin for Ether and then trade Ether for seeds in the seeds Ether pool to get you the cryptocurrency that you wanted, seeds in that case. So a bunch of liquidity pools were created with varying cryptocurrency pairs. And because Ether was the intermediary, trades can happen. We could execute those trades and people could add liquidity. Anyone who wants to can stake liquidity on Uniswap's platform. When you do it, you're retaining custody of your funds, as mentioned earlier. You're not giving up your money to a centralized entity that could lose it or somehow do something stupid and end up failing and your money disappears. That isn't possible with the design of this ecosystem. Uniswap is open source. It's been audited. The code has been audited by numerous software engineers who like know what they're looking at. You could even, if you wanted to, if you had the ability to do it, you could fork Uniswap and use the code yourself and make your own platform that does the same thing. Actually, I think they have a license now that discourages people or doesn't permit people to do that for a couple years. But you can do that. You could do that in the past, which was why exchanges like Sushi Swap came into existence. They literally just ripped off Uniswap's code. And that was allowed because it was open source. So then later Uniswap took steps to prevent that. The point, though, is that it's open source, it's available, it's been viewed by a lot of people. And so that makes it more secure in the sense that, if something can be verified by lots of people because it isn't gate kept and the code isn't in a black box, we can get more reliable sources confirming that that code is good. And as a result, Uniswap has never had any sort of like security issues or product quality issues in terms of successfully making trades on the platform. Although, like I said, their UX could definitely be better and clearer than it is and more user friendly than it is. All right, so yeah, if we're looking at that, so that's the pair that we see at the top, Ether and Bitcoin. So you can see under where it says liquidity, $55,000. It also lists Ether and WBTC. I guess as an aside, I was debating whether I should mention this. It's abbreviated as WBTC here because it's actually wrapped Bitcoin. So it's a version of Bitcoin that can be compatible on the Ethereum crypto network. So anytime you see W and then the abbreviation for a cryptocurrency, I can't think of a single exception. It means it's a wrapped version of that cryptocurrency that can be compatible on this network, the Ethereum crypto network. If it's a cryptocurrency, that wasn't built on top of Ethereum, which Bitcoin obviously wasn't because it's an older cryptocurrency. Bitcoin is the original cryptocurrency. So you can see that it says ETH 0% right now. And you can also see at the top that it says out of range. And then where it says WBTC under liquidity, it says I have 0.967 Bitcoin at this time, at the time this screenshot was taken. And it's 100% Bitcoin. And then you can see in my fees, unclaimed fees, $1,400, I have both Ether and Bitcoin, which I've earned in fees. Below that, you can see the price range. And again, we're out of range. The minimum price of 13.13, max price 13.858. And then it has the current price. And that's how we know, like, this is why it's out of range, because the current price is lower than the min price that I had established here. So I'm going to walk you through how you would set up this position. Basically, what this means is that I defined a range in which I thought Ether and Bitcoin would trade in relation to one another. So I decided, like, okay, I would like to add liquidity to the market, but specifically, my liquidity will only exist in between the price of 13.13 Ether per Bitcoin and 13.858 Ether per Bitcoin, which is a pretty narrow range. On Uniswap, you can choose to stake in a variety of ranges. And I think let me just hop into that now and show you. One sec. Okay, so this is Uniswap's platform. The first thing you'll do, just to backtrack a little bit, is you'll connect your wallet. You're going to need a self-custody wallet in order to be able to do this, which again is good because it means that you're the one that has custody of your funds. The self-custody wallets that I tend to use most often are MetaMask and Coinbase's self-custody wallet, not to be confused with other Coinbase products that are not self-custody. We know that a wallet is self-custody if we have the key or the mnemonic device to access that wallet. And nobody else has access to it. So we always want to keep that safe. Not a flaw exactly, but something you need to be aware of when you're using self-custody wallets is that your funds cannot be recovered by, we don't have a centralized entity, creating the monitoring a password for us or something. So it's not like when you're logging whatever into your like bank account online, if you forget your password, then you can contact them or whatever, do whatever process they have to reset your password. That isn't possible, or we haven't figured out a way to do this yet, when we're using a decentralized tool like a self-custody wallet. So we have to make sure we keep our key in a safe place. So that's super, super important. Related to that, we never want to connect our self-custody wallets to any website that we're not absolutely certain that we can trust. That's been a more recent scam. Sometimes websites will pretend to be Uniswap, for example. I saw this on Twitter a lot where people would tweet at Uniswap and then somebody would reply with like a fake handle that kind of looked like they were from Uniswap. And they would say, like, click on this link and we'll help you. We'll offer support. Here's our support link. And people would click on that link and then they would connect their wallet to a fake site pretending to be Uniswap. And when they connected their wallet, what they didn't know is that they were agreeing to let the people behind that site steal their cryptocurrency. So that's super painful when that happens. We want to avoid that, of course. Another way to avoid issues with potential theft can be to use a multi-sig wallet. And Gnosis Safe, which is now just called Safe, is the best quality one to my knowledge. So you can check that out if you want. Multi-sig just means that your core wallet, the wallet that you're storing your cryptocurrency in, will require signatures from multiple other wallets in order for you to transact. So that can be a bit of a pain, but it also means that if somebody steals the key for one of your wallets, they can't actually steal your funds because they don't have the key to the other wallet. So this is just something to keep in mind that you could check out. I get asked a lot about whether or not you should use a hardware wallet like Trezor. What's the other one that was used a lot. I can't think of the name of it. I've never used a hardware wallet, but yeah, what I tend to say is like I've never found a hardware wallet necessary. I think they're like a couple $100 now or something like that. I'm I don't really see the point as long as you're storing your key safely offline and you can use a multi-sig wallet for free and have that added layer of security if you need it instead. Like, what I'm saying is that I don't see a clear benefit in using a hardware wallet, and I haven't seen that since I started trading Bitcoin in 2013. I haven't been convinced of that. So, right on. Okay, so we've connected our self-custody wallet over here. You can see that, right? We can see the balance in the wallet in USD. You can see here, hopefully you can, that I have the MetaMask Chrome. I'm using Chrome, their plugin. So you want to be careful with this so that your password is not being stolen. That's a separate conversation. Keep your shit offline is I guess the best rule of thumb. Um, MetaMask does require a password, but then the wallets within your MetaMask can have their own private keys or mnemonics. You can also, what's the best way to explain this? When you have a self custody wallet, it just exists on the blockchain. It's just there, right? And then when you're using various self custody wallet tools like MetaMask or Coinbase Wallet, it's like those tools allow you to interact with your wallet on the blockchain. So it's not like MetaMask controls my wallet or MetaMask is the only means by which I can access my wallet. I could literally import wallets that I'm accessing through MetaMask into other tools if I want to, using my private key or mnemonic. I can import my Coinbase wallet, my Coinbase self-custody wallet into MetaMask if I want to do that. So it's kind of like an analogy I've used before is that it's like if you have a website, right? Like you're accessing a website, and the website is just on the internet. And you can access it on your phone or on the computer at the library or your laptop or whatever. It's just on the internet. And that's what it's like when you have a self custody wallet. Your wallet is just on the blockchain, and you can use a variety of different self custody tools to access your wallet and tell your wallet to do different things, to transact in different ways, so long as you keep your private key or your mnemonic safe and accessible for you to use. So there's that. Okay, let's take a look at what staking actually means. So you can see I have one staked position here in seeds and ether. If I were going to create a new position, we'll use seeds as an example, our cryptocurrency. Um, Seeds also has a staking bonus that you can win. And that's the other thing I should make sure to say. Sorry, I'm like making a note. Something I need to make sure to remember after this call, after this talk. So when you stake, in addition to earning fees like the 1,500 or so, whatever it was, 1,400 in fees that I had here, you can also earn free money through airdrops. Sometimes it's a lot of money. Uniswap itself did an airdrop in September, I think, of 2020 that was huge. And I was really grateful because I got a lot of money because I staked, but I also hadn't staked a lot of my cryptocurrency. I had a bunch just sitting in a wallet that I didn't stake for no reason. And I was kicking myself because I've said this a bunch, but if I had staked all of the cryptocurrency that I had, I could have bought like a nice house in the States with the additional money I would have gotten from that airdrop from Uniswap. So I always tell folks like certainly nothing in cryptocurrency is without risk, but if you're holding cryptocurrency and you're not staking it on a decentralized platform, there are other centralized platforms that use the term staking in a misleading way. It's better to do it on a decentralized platform where you're connecting a self-custody wallet like Uniswap. The returns are often much greater. It's just better. And if you're not doing that, it's kind of like hiding cash under your mattress. If you have the funds, you might as well use them to make yourself more money. You might as well put them to work passively. So you're earning fees, but you can also get these other bonuses as well. Um, if we're going to stake Ether and seeds, we're going to need the seeds contract address, which we can find in the seeds FAQ. So that's here. And then I can just copy paste that here. Then it's going to ask you to choose a fee tier. There are different fee tiers. The most common is typically the 0.3% fee tier. We'll take a look at the like the ranking of the biggest pools, and then I can talk a little bit more about what fee tiers mean. But in this case, we're going to go with the 0.3% fee tier. It's the only fee tier, in fact, that's available for Ether and seeds. So then we come to setting the price range, like we saw in the example I showed earlier. I think it's a little bit easier to immediately understand if we do it in terms of seeds per ether rather than ether per seed. And then we can look at this graph. So the gray line, this is what I'm talking about with like the user experience not being amazing. The gray line indicates the current price. This pink stuff back here shows us where um, uh, other cryptocurrency has been staked, ranges, price ranges that other people have chosen to set when trading cryptocurrency. So we can make this narrower if we want, and you can see that it changes up here and so on. And again, if it's a narrower range, actually, I don't think I explained this very well or at all earlier. You can choose a narrower range to try to leverage your capital. The idea is that, say you had $10,000 you're going to stake. If you're staking $10,000 across this whole range, then you're earning whatever amount of fees across the whole range. But if you can choose a narrower range closer to the current price, then it would depend on the specific prices that you're setting. But in this case, if it's a narrower range, you can leverage your capital more efficiently. So staking $10,000 in this narrow range, so long as it's trading in that range, it could earn you as much in fees as, say, staking $200,000 across the entire range. Choosing a narrow range is a way to leverage your capital. But the trade-off is that if it goes out of range, like I showed you earlier in my position that went out of range, I was no longer earning fees because it had gone out of that narrow range. And every time you're staking, you have to pay what's called a gas fee, a transaction cost in Ether in order to create the position. And that's been super fucking expensive, especially when the market has started to go crazy. So there have been other solutions that have presented themselves, layer 2 solutions, they call themselves in many cases, to offer cheaper options. They're not perfect either. um, how much should I talk about that right now? Like, so there's the Ethereum mainnet, and that's what's it's also called layer 1. So these layer 2 solutions are built on top of Ethereum, and they're storing data in different ways. In some cases, they're just designed in different ways such that it makes transacting on them cheaper. But the thing is, in most cases, you can figure out. I'd heard recently about a workaround. Um, in most cases, you're going to have to pay the layer 1 gas fee to get to the layer 2 and then to get back off the layer 2. They're like, you're going to use a bridge to do that. Optimism has a bridge. They're a layer 2 ecosystem. Arbitrum is another. Their bridge is free to use right now, as I understand. I'm just sharing that to say that gas fees are annoying. There are solutions that are out there working to address that problem. We still don't have an amazingly designed solution out there. I don't know that something like Arbitrum is going to choose to have free bridging forever, I guess is what I'm getting at. Anyway, but so that gas fee is something that you want to be aware of. And you also have to pay it if you unstake. So if your position goes out of range and you want to restake in a different range so that it's so that you're earning fees again, you're going to have to pay to unstake and restake it. And that can severely cut into the profits you're making depending on what the gas fees are at a given time. So that can make it worth using a layer 2. In our Discord, like 3 years ago, I think it was in like 2021, I started doing these experiments with staking on Optimism. Optimism was new then. And because I did that, I later got an airdrop, by the way, that was like, I don't know, 5 grand. I think it was over $5,000 in free money that I got because I staked on Optimism. And yeah, I was messing around with that just to see how much it would cost to stake and restake. And it was like pennies on the dollar. So it was a lot cheaper. So in some cases, that can be, in a lot of cases, that could be a good way to go. And it's good to be aware of it. Um, but I don't know. Just the larger issue of these networks becoming more expensive to use as they scale and as the price of the cryptocurrency goes up. I guess what I'm getting at is that is a problem that nobody has cracked really in a really clear, um, like obvious sort of way yet. And I don't know what they would do. I don't know what can be done, um, like long term sustainably in that regard. I'm not sure. Um, yeah, so that's something to keep in mind with your staking. So if you want to set it and forget it, you're probably going to want to go with a wider range. But if you want to do it more proactively, or if it's a pool like the one I was showing you, this is a super active pool. There's a lot of trade volume in Ether, in the Ether Bitcoin pool. So in that case, it can make sense to try and go with a narrower range, and it may be worth staking and unstaking, restaking if you have to, because you're just going to earn so much more in fees. And the other thing about these giant pools like Ether, WBTC, is that they're probably not going to be giving you an airdrop. You're probably not going to be able to get any kind of staking bonus here. You're probably just using these giant pools to earn fees. And again, we'll take a look real quick we'll take a look at the listing of various pools and their sizes so you can get a sense of what those are. But just to walk through the rest of this really quickly. So you'd choose the range and you'd stake. And then it's going to calculate a specific deposit amount that you need depending on the range that you've selected. It's going to change. This is annoying. It's really annoying. I don't know how, like Uniswap needs to figure out a better solution for this, frankly. So like, for example, here, if I wanted to stake there's a lot of seeds in this wallet, 2.5 million seeds in this wallet, then I would need $67,000 worth of Ether in the wallet as well for this particular price range. And you need both of these, the amounts of both of the cryptocurrencies in this pair have to already be in your wallet in order for you to stake this position. And in addition to that, again, you need gas fees. You need enough in Ether available so that you can pay the gas fees to create the position that you're staking. So this can be it just can be annoying because you can transfer funds in and you can think it's the right amount and it's some weird amount and then you end up having to transfer in a little bit more and it's stupid. So you can see here how the amounts are changing as the range is narrower. If I wanted to stake in this really narrow range, then I'm going to need different amounts of Ether if I want to stake this amount of seeds. So yeah, there's that. It can be really profitable though. As you saw, it's pretty profitable to make, whatever I showed you here. Because again, this was in like a week and a half or something. It was fast. It was cool. All right, let's take a look at the data. Let's see. For pools. So if we're looking at this here on Uniswap's platform where it says TVL, total value locked, this is the entirety, the value of all cryptocurrency currently staked on Uniswap's platform is heading up towards $6 billion, which is pretty good. This is the trade volume in the past month, it says. So over $53 billion have been traded on Uniswap in the past month. I haven't checked this out recently, but I remember, I think it was in August. It must have been 2021. But there was an article about Uniswap overtaking Coinbase in daily trade volume for the first time. Maybe it was 2020 then, actually, because gas fees later got in the way. And in 2021, gas fees were really insane. Anyway, it was a big deal because it was like, wow, so many people are interested in decentralization that they'd rather use Uniswap and use this platform than go with a centralized popular exchange like Coinbase, um, which was really exciting because Coinbase treats their customers like shit too. But then gas fees really stymied that because the market started going crazy and gas fees became more expensive. And then suddenly it didn't make as much sense to trade on Uniswap because you had to pay these crazy gas fees. So this is significant trade volume though. And I kind of want to look this up later. I won't do it right now, but yeah, it'd be fun to see what the trade volume is on a platform like Coinbase now. All right, so just to show you this real quick, because it's already 10 till, and then I'll take a look and see if there are any questions. Um, so we can click on tokens and then pools here. So yeah, if we're looking at pools, this is ranking them by total value locked. So the total amount of cryptocurrency staked in that particular pool. So the WBTC Ether pool that we were looking at earlier with the 0.3% fee tier, that's the biggest pool in terms of the amount of cryptocurrency staked in that pool. We can see the 1-day volume is 12.8 million, but like, whoa, look at this. It's not anywhere near the 1-day volume of other cryptocurrencies. So we can click on this. USDC Ether has the greatest 1-day volume. And this speaks to what I wanted to talk a little bit about as well with the fee tier thing. If you recall before when I was showing you, we had to select a fee tier when we were choosing to stake, and we chose 0.3% for the Seeds Ether pool. There are other fee tiers like the 0.05% pool. This fee tier is typically used for what are called stablecoin pairs. USDC is a stablecoin, USD, US dollar, and it's Coinbase's stablecoin. Like they are responsible for issuing this coin. I think indirectly. I think it was issued maybe through Circle originally, but yeah, this is like Coinbase's thing, USDC. So like I'm not into supporting their stuff, so I don't trade. If I'm using a stable coin, I typically don't use USDC. But yeah, we can see here that there's a ton of volume in this pool. And what that means is that when there's trade volume, which means that people are transacting, that people are making trades in the pool, you can obviously earn more in fees because more people are paying fees, more people are making trades, and they have to pay fees to do that. So you can use this as a guide to make decisions about, particular pools you would like to trade in. I was interested in WBTC and Ether in part because I recognize that if cryptocurrencies were moving together in price, and if you ever look at the Ether and Bitcoin prices, I think I can show you this real quick. Um, these prices, like if you're looking, this is the Gemini centralized platform. I found that if two cryptocurrencies in a pair tended to move together in the markets, then I could set a narrower range and it would stay in range for longer. And I could therefore earn more in fees without having to stake and unstake and restake the position and have to, again, having to pay the gas fees for that. So I chose Ether and Bitcoin because if you look at this is the Ether graph in US dollars. And let's see how similar that looks to the Bitcoin graph. Let's zoom out. So I mean, it's fairly similar. They're moving in pretty similar ways. If we go back to Ether, we can see it again. Ether made a bigger drop here, but yeah. So the reason for that is that Bitcoin still has a huge influence on the cryptocurrency sector at large. I would say it's a big part of it. Um, but yeah, I'm just sharing that because I don't know how obvious that seems or how maybe this seems like it's too in the weeds. But I realized that fairly quickly into like my staking experiments. Like if I found two cryptocurrencies that moved together in price and stayed roughly equivalent to one another in price, then they would stay in a narrower range, and I would save money and hopefully make more money. Excuse me. And because I wouldn't have to stake and restake. So that's why I went with Bitcoin and Ether. And then we can see the number 2 pool again is the stablecoin pool at the 0.05% price tier. The third one is the same pair at the 0.3% price tier. So if we look at the volume here, like for example, 460 million in USDC Ether at 0.05% and less than 30 million at 0.3%. So, I mean, we can infer there that if you're a trader, if I'm trading and I want to trade this pair, I'm going to want to trade in the pool that charges 1/6 of the fees. The 0.05% fee tier is much cheaper to use. So, from a trading perspective, people are probably going to want to trade more in there. So you can take that into consideration too when you're choosing to stake. Yeah, so you can go through here and take a look and see what's going on. And it can help inform your trading decisions. And another thing I think it's helpful to share as sort of a last thought before I look to see if we have questions in the chat is that this can also be a discovery platform, specifically Uniswap's like list of tokens. You can go back here to tell us if a cryptocurrency maybe is up and coming and to maybe get a hold of it before it is made available on a centralized exchange like Gemini or Coinbase or Binance or Kraken. What's happened many times in the past is that, somebody will launch a cryptocurrency and maybe they'll be trading on Uniswap for a while. And then at a certain point, they'll convince a centralized platform like Coinbase or Gemini to allow trade on their platform. And you can trade those instances, those events. And what usually happens is that it spikes up a ton in price and then comes back down pretty quickly. So if you time it well, and if you're aware that that's going to happen, you can end up grabbing a bunch of the cryptocurrency on Uniswap before it launches on the centralized exchange. And then when it spikes on the centralized exchange, if you want to do a short-term trade, you can sell it when it goes up a bunch and make a good profit. That can be, I feel like that happened more frequently like last market cycle a few years ago. But it's still something that you can keep an eye on and be aware of. There are other platforms like Uniswap, um, other copycats, other versions of Uniswap that were launched on other blockchains outside of Ethereum. Binance Smart Chain is an Ethereum copycat I've talked about before that I don't recommend using. I don't recommend using Binance stuff. If you can avoid it, if you have to use them to get a specific cryptocurrency you want, then just try to get it into a self-custody wallet as soon as possible. But yeah, they have a version that I think is called Pancake Swap, and I wouldn't suggest using that tool. But yeah, Uniswap like came up with the idea and figured this out, and they're by far the biggest decentralized cryptocurrency trading platform today. And they have fancy investors and stuff now too, which is I'm dubious about because it's not very decentralized to have like the fanciest venture capitalist in Silicon Valley heavily invested with a huge stake in your platform. But that's the reality. And it's something that we can also be aware of, like as traders, because we know that if those fancy firms have invested in these platforms, we can trade off of that knowledge. We can use it to inform decisions about whether or not a trade is likely to be profitable. And I'm not like above doing that, but ethically speaking, it makes me feel weird. And I don't think it's great that like Andreessen Horowitz is like they've invested in Uniswap. And yeah, they're very rich and very fancy, and they're one of the few good venture capital firms out there in terms of actually being good at investing in tech profitably. Most venture capital firms, there's maybe like 50 to 200 good venture capital firms in the world, I would say. And the rest are all chasing the deals that the good firms are doing. Yeah, all right. I think that's enough for today. Let me hop back into the chat to see Crash Crypto's here. Hello. Nice to see you. All right. It looks like we don't have any questions, so I'll let y'all go. Um, yeah, as I mentioned, we have 8 days until the Bitcoin halving, and I should share that we have 9 days now until our course closes. Our course is called Cryptocurrency and How to Trade It. This is weird because it's like a big picture of my face, but yeah, the link I'll put in the chat and it's also in the description below. And yeah, if you want to trade with us, I teach the course. We would love to have you. It supports our work so that 100% of the value of gifts that come through Seeds can go to people in need. And you get Seeds cryptocurrency when you join the course, which makes it effectively free. So yeah, it's meant to be a like a win-win-win, whatever, for everybody involved. And we also have payment plans if that's helpful to you. They can be as long as 36 months in length. And in addition to that, if funds are a challenge, you're always welcome to redeem a seed to ask for help to get the money to attend the course. We've had multiple people, at least 2 or 3, I think, have done that in the past successfully. So that can be an option as well. And yeah, check this out because, like, literally just having the cryptocurrency, past performance doesn't guarantee future results, but Seeds went up a lot in the last market cycle, like a lot of cryptocurrencies did. So just having the seeds and particularly getting involved in them just before this next market cycle, before the Bitcoin halving, history has shown us that there may be a likelihood that that could end up making for profitability just because you have them, even if you did nothing else. So there's that as well. All right, y'all. I'll let you go. And again, doors close next Saturday, the 20th, which is also the day of the Jupiter Uranus conjunction in Taurus. Okay. All right, y'all. I appreciate you for listening. I appreciate your time and attention. And I'll let you go. And whatever you do, I just really want to strongly encourage you to get involved in cryptocurrency in some way now ish, because like I said, like the whole mission of all of this is about getting more resourcing to nice people. And yeah, this is a really special time. There's a lot of opportunity at this time. And so I hope that nice people like you will take advantage of it. Okay, I'll let you go. Have a good weekend. Take care. Bye.